Hello and welcome to the Friday market update from sunny Tucson, Arizona. I lived here for a long time, celebrating Memorial Day weekend with some family. But first of all, we have to give our heartfelt thanks to those who have made the ultimate sacrifice to protect our country. You will never, ever be forgotten. We appreciate it. So, back to this week, slow and steady. This is the likely scenario we will see with rates. Rates ticked up just a bit this week, but not significant. There are a couple of economic reports indicating the economy is still strong. However, if you look a little bit deeper into those reports and consider the revisions that were made to the previous reports, the economy is just not as strong as it's being portrayed to be. So next week, we'll see some data from Case-Shiller on the housing market to see how home values are holding out. I think they're holding out pretty well. May not be as strong as before, but they're still doing really well. We will also get another read on GDP, gross domestic product, and real strength of the economy. Last one was not that great. The big report we watch for is a personal consumption expenditure, which is PCE, which is the Fed's favorite indicator of inflation. So now my rant on home buyers. So here we go. Some of those who are waiting on the sideline, I hear it a lot. They may be too late to get into the game. And here's the deal. It's virtually impossible to time the market. Some are waiting to see if values are going to come down. Is it going to crash? There is some talk that more homeowners are becoming delinquent and some foreclosures could pop up. Some say the rates are just too high to make their comfortable mortgage payment too much. If more foreclosures actually do come onto the market, guess who's going to really be waiting on the sidelines to gobble them up? Probably investors and flippers. They too have had a very hard time finding inventory to buy that makes sense. So they have money ready to be deployed immediately. Unfortunately, it can be very difficult for the average buyer to swoop in and purchase those properties because you got a lot of properties and people coming in to get those properties. So now on the flip side, if they wait for interest rates to drop, there will be a tipping point where new buyers will actually come in and buy, creating a big supply and demand issue. So, too many buyers and not enough homes, and that is a likely scenario when rates do drop. So, that is what is talked about all the time. Many people have heard of the expression, you better get comfortable being uncomfortable. And the reality is, home buyers today will have to get uncomfortable before they can get comfortable. Real estate is a long term investment, it's not a get rich quick scheme. And as long as you can make that payment, the most important thing is to enjoy the home along the way. Buying at a lower value almost always makes sense. So while interest rates are relatively high compared to a few years ago, the only thing that can happen when you actually secure a home is your interest rate and mortgage payment can get better. It won't go up because you're fixed in. But if rates drop, you can get a lower payment. So I was talking to a good friend of mine who bought a home in 2008. That was probably the worst time you could possibly buy. He bought it for $480,000. He put 10% down, thought he had just, made a great decision. And then all of a sudden, boom, what happened? The market completely went to pot. And he had a 6.75% interest rate at the time. So $480,000 in a couple of years, it was now actually in the first part of 2011, he said it went down to $280,000. He ignored it. He didn't freak out. 480 bought it, now it's worth 280. He still loved the home and he could make the mortgage payment. His income started to go up. So now, looking back 16 years later, his income has more than tripled. He has paid down the loan to under $300,000. And when rates dropped, he was actually able to secure an interest rate at 2.75%. And his home is now worth over $800,000. Tons of equity in that home right now. So it's super easy for buyers to get incredibly myopic right now. Everything in the current moment seems dire and absolutely critical. They are looking at every single penny, every single rate, everything that they can look at to try and make it better. So, are they making the right decision? Is this the best time to buy? Should I wait? With real estate, particularly for first time home buyers, it is a long term game. The longer they are in the home, the more likely they will benefit from the investment. The extra dollars spent on the home or mortgage payment fades away as time passes and the value of the home goes up. So, more importantly, they're creating memories in their homes. It's all about perspective. They are in the moment right now, but that moment will pass quickly. It's your job to help educate them and give them perspective. So, go out there and get them ready to buy. Nothing is easy, and you're going to have ups and downs along the way. But as long as a buyer goes into the purchase of a home being educated and they know their time frame, time is on their side and they will overcome any perceived mistake by purchasing now or waiting. So educate your buyers and sellers to be uncomfortable before they can be comfortable. It's time to buy. It is the buying season. Values are not going to crash. They will look back and be very happy they bought when they did and be in a comfortable place down the road. So, as always, feel free to reach out to me directly to get your buyers pre approved and educated so they can make the right decision for them. You can also send them my calendar link where I will go through a free CIA credit income asset analysis so they know exactly where they stand now and what they need to do to get into their home. So let's run their numbers. Have an awesome Memorial Day weekend, and we'll see you next Friday. This is Gaylord out. Bye-bye.